Good morning, good afternoon. Darryl Knopp here. Hello again. This is, I think, number 4 in our series. Thanks for tuning into the Digital Banking LinkedIn Live series. As I said, I'm Darryl Knopp. I'm Senior Director of Portfolio Marketing here at FICO. And I'm going to discuss the 11 commandments of digital banking today with an emphasis on communication and the fundamental duty that banks have to make customers feel safe and secure and actually make them safe and secure. We're focusing on the 2 trends or the 2 commandments called pester me, but only when I want it, and make me feel safe. As you know, I've got a long background in banking. I started as a teller back in the early 90s. And when I got to Toronto head office with Canada Trust, I met Bruce Hodges, and Bruce Hodges and I have been working together on and off for a long time. I was actually master of ceremonies at his wedding, and I'm delighted and thrilled to have him here today. He's co-founder of Parachute. We've worked together, as I mentioned, on various projects over the years. But before we kick it off into the questions, the Q&A, Bruce, why don't you tell us a little bit more about yourself?
Yeah, perfect. Thanks, Darryl. So, as you mentioned, I've been in financial services for, over 30 years. The first 10 in banking, working my way up like Darryl from teller, personal lender, commercial lender, product manager, and had about a 4 billion credit portfolio in small business credit when I left banking. And I actually left to what today we would call a fintech in the dot-com boom. So, digital 1.0. And in fact, we built Fair Isaac's liquid credit, the first generation. From there, I spent 20 years in insurance around the globe, actually living in 7 countries and working in dozens, spanning roles of CIO, COO, CEO, covering product marketing and a heavy dose of digital transformation. So, and as Darryl mentioned, now I'm building a startup in the financial wellness space. We call it Parachute. And we're targeting customers in the 600 to 700 credit score space that have fallen off mainstream financial services. And we have a program to get them back to good financial health and avoid the predatory and payday lending space. So that's me.
Yeah, Bruce, that's awesome. I had forgotten that you're one of the few people I know that's actually lived in more countries and more cities than I have. Hey, let's jump right in. So, communication is at the basis of any strong relationship. And when you look at digital banking, the banks have the ability to over communicate with customers, and customers have the option to determine what level of communication they want. There's lots of products out there in the market that allow you to do this. But again, I think that in the digital space, you gotta really focus on communication. It's important to make the level of communication configurable for your customers. So let them tell you how much they want. And within your new startup ventures, what are you seeing customers want to control more of when it comes to their banking? Have you noticed any trends on places where there's high communication versus not so much?
Yeah, so the data point you highlighted, to chat about is customers want us to over communicate. I would say that's particularly when it comes to suspicious charges in their accounts and NSFs. I think I'd actually add to that and go a little bit further in what we're seeing, and I would add things that negatively impact their credit score. And I think we're going to talk about that and unpack that a little bit. The suspicious activity NSFs, I would say those are table stakes now, super valuable. You must haves. But there's an interesting discussion on the scoring wellness side and the role that's starting to play. I think that's the next frontier. So, I mean, Darryl, back in the day, we talked about, doing loans at bespoke rates for customers. We could go down to 1 or 2 decimal places. This is, late 90s, but it really wasn't possible. And the reason was people didn't know how we scored or decisioned them. And credit score is now in the vernacular of the population, and it's on almost every site. And I think that opens a huge opportunity in communication and also education. We'll talk more about that, particularly with the advent of open banking. But I do think also there's an element of customers are confused and what is the score and how does it work? So I think it's an area we can do better on. And, if you break it down to the components, you'll see this on lots of sites, like making your payments on time, no new debt, credit utilization. But I think there's a huge opportunity, and that's what we're capitalizing on at Parachute. Consumers don't always know what good behavior looks like, and I think FIs can really help, and open banking will make that possible. You did mention that consumers are good at telling their banks to stop over communicating. I think that's true. I think the notifications, that's been a game changer, and you can modify them. You can turn them on, turn them off, which is great. Probably many people on the call don't necessarily have that at their bank. So these are table stakes I think need to exist. But I also do think, and we'll talk more about this, customers will accept more friction if it helps them feel secure. And I would actually argue that you may want to add some friction by design to help them feel secure and in control. But we can talk more about that. My favorite feature in online banking is the texting of credit card transactions. I think we'll talk about that in the Make Me Feel Safe section. This is one of my favorite features. I would question, why don't we have that on core accounts? And again, I would hypothesize that the same should be true in the open banking world, of elements that get people financially healthy. We see it in quantified self, right? Like physical wellness. We see it in diet and mental wellness. But why aren't we seeing this in a robust way in financial services, particularly in the banking side, where we have access to a ton of data? So anyway, enough on that for me.
Yeah, lots of good jewels here. I made a couple of notes. I mean, I think the first thing is that I've talked about this till it's a way to get Darryl to go on a rant, is to talk about friction. One of the tenets of the, or one of the 11 commandments is actually, as friction's not inherently good or evil. What I would say to that one is, you know, it's how you present something, and the effort that people have to make that gauge the level of friction. And if you're going to have someone do a secondary ID verification, front and back, the driver's license, a selfie, something like that, or linking a bank account, which is quite common in the US, tell them why you're doing it. Right? I mean, when you take people on that journey, they're prepared to go on it with you if there's good and valid reasons. Then give them value from that data, right? And the value could be, in this case, security, or the value could be in extra products and services. The other quick note I'll put on, because Bruce, you'll like this. So back in, Bruce and I, we did talk about what we called then variable rate pricing, or risk-based pricing. Well, I happened to be digging through some books last night, and I found in 1998, me and the team, the risk modeling team at Canada Trust, put together variable rate pricing for our loan products at Canada Trust, which, to Bruce's point around communication, was incredibly difficult. There wasn't as much transparency around scores. People did not necessarily understand them. And I think FICO and others have done a lot of work to have people start to understand this and the importance of it and how to manage it. So I think there's a lot of good things around there. And Bruce talked about financial wellness. Of course, that's what he's kind of started up. But there's a tremendous amount of communication around that. Bruce may not be aware, but in the US, we can get our transactions through our core accounts actually flagged for us. But it's not as common as the credit card, which is actually a critically important one, I believe. Helps fraud prevention and other things. But let me jump into the next question. So when it comes to banking, consumers have higher expectations for trust than they do in other industries, and financial institutions must, really be thoughtful about things that they're designing, and the way that they're improving the digital offering. Transparency is a huge piece here. Banking revolves around your life. Trust in financial services at a foundation level is about safety. For many consumers, banking is complex. My first bank account was opened by my parents, and I learned a lot of that through them. And then, when I became a teller at university. But how others learn, there's still not a great deal of financial wellness and financial education around there. As we look towards the latter half of 22, what are some in-branch trends that you foresee staying? And also, being, as most banking is done digitally now, what are the top things that make customers feel safe and give banks the go-ahead to access more data?
All right,
there's a couple of questions there. So there's data. There's a data question.
Yeah.
And what do you think we're going to use branches for?
Yeah, for sure. So let's dig into a few of the key elements first. You said trust, transparency, safety, and relationship. I mean, the banking, the branch thing, rather. I mean, branches aren't going away as fast as we obviously thought they would. We thought they'd be gone in the early 2000s. I think they're starting to see more progress there now, but boy, 10, 20 years ago, we thought this, 20, 30 years ago, we thought they were going to go away. So they certainly have duration. But getting into the trust, transparency, and safety element, I think that, the digital space, this starts at login, right? So banks who keep a simple sign-up process to access basic digital banking is a great first step. That's hugely table stakes at this point. I think the stats. I think, the average customer attrition due to issues with digital onboarding is between 25 and 40%. And in the Deloitte study, they said 26% of consumers surveyed say an easy enrollment and login is the most important when choosing a bank. So, I think if people don't have that, that's a huge issue. But, this gets into the commoditized nature of banking and the reality to get them in the door. I think there's a role here in the make me feel safe, trust and transparency, about the information when they're asking, and you touched on this a few minutes ago, information that's needed to help the bank address the customer's needs, or more information, and explaining to the customer why certain questions are being asked or why materials are being requested. So, but the thing I would add on to that is, with text that is simple and digestible to the average consumer, And I don't think we do a great job there. I think, when it comes to plain language agreements, I think we can drive a far better customer experience. There's a survey done in Canada several years back. The average reading level is like grade 9 or something along those levels, probably the same in the US. And what does that mean for consumers and trust? Most agreements are written by lawyers to protect the organization. What about turning that upside down and with the lens that, so the customer understands the product and, oh, by the way, we can protect our legal requirements. So, it's getting away a little bit from digital, but I think it's also super important. And then, when you're communicating with customers, whether it's a daily alert or asking for new data, or I think it's important to describe what happened and remind them that they are triggering these rules themselves. Ideally, I mean, assuming that's part of the interface. And that can start with the transactional data, like my example above, or you mentioned on core accounts, but then opening the door for the analytical data as well, like reminder of payments on time. I mean, we should be easily able to do that, and then go further with the analytical data that drives good financial behavior as we bring back that wellness. So credit utilization, spending habits, and then going to benchmark that against other consumers. I mean, imagine a scenario where you return data on customers with their media subscriptions. Everybody's talking today about, Netflix, Disney, all these streaming services. What if you return data and gave them, you're subscribed to 7 of these, but the average person in your credit score or your income level only has 2, and giving them actual meaningful ways they can change their life and change their financial relationship.
I think that's a good point. I know, having rejoined FICO in 17, previous to that, being with a fintech, we, one of the things that we looked at is, how do you actually do financial education? How do you measure that? How do you engage in that? It's incredibly challenging. I think there's a lot of strides being made in around things like what you just talked about, subscriptions and regular expenses. And the industry's made great inroads in getting to what I would call digital financial advice and management. This idea of a personal financial manager that would be AI based and potentially have a human interface if you had chose to. We're not there yet. And I think, open banking coming in Canada next year in theory, although I can't imagine it won't be delayed. But in the US, we have a great deal of bank aggregation where you can link this data. Why that's important is when I can put all of my information in one place, then I can, or a bank can help me, or financial advisors can help me understand all the moving pieces. Today, it's disjoint. The other one that you mentioned is payment reminders. And it's one of those things that I think that we should be able to turn on or turn off. It should automatically be turned on for the first payment for something, and then allow people to turn it off if they would like. We the risk management person in me, we utilize it on people who've got a history of maybe persistently being late, or in fact, sometimes when it's during COVID, a lot of banks turned this on just as a matter of course. So they could get early warnings as to whether or not people needed help. It wasn't to do anything negative. It was early warnings to kind of help people out. So I think there's a lot of good that can be done. And I love the piece you mentioned on, when we're clicking through all these agreements that we rarely read, and I read some of them. They are written. They're two lawyers having a conversation on paper, and that's extremely difficult. And people even will go through those and might read them, but they won't necessarily understand them. And it is more about bank protection than anything else. And I understand that. As a business person, so are you. I understand it, but it's putting that client front and center is what you're talking about there, and their needs. And if you can take them on the journey that they should want to go on, and they need to go on, and get them that education and wellness, it's our duty as business people to figure out how to make money given that constraint. Like, I think that's a great constraint, right? The success of your customer is a great constraint. So let's dive into that, kind of the next question here. Customers preferred communication routes differ, and you mentioned branches, or I mentioned branches. We talked a little bit about it. Banks can generate performance data to train their machine learning models through supervised learning. They can use the data and understand customer history and build very personalized experiences, kind of like this idea of marketing to the one. What are a few ways that we're seeing banks give more control and access to customers than ever before?
Yeah, interesting. So, I think we did cover quite a bit of this, but the alerting of suspected fraud, that's come along very well in their preferred channel. And now there's no need for a human to take action, right? This is disrupted processes that can be put on track quite quickly, and it's gotten way better. I mean, this is one that resonates with me a lot. I remember back in my expat days, I'd fly into Canada in the middle of winter from India or something, and I'd be, getting gas. I'd have two toddlers in the back of the car, and it would cut off my credit card, and they'd say, call the 1-800 number, which was a disaster to get through. So I think we've come a long way in this. We can approve transactions in real time. We can use multi-factor authentication. That all, again, speaks to what you said about, keep me safe, make me feel safe, but also operational efficiency elements there. So I think, we've automated methods to get customers to make decisions that make their lives easier. I think there's more we're doing on this: temporarily freezing a card, approving a transaction. But again, I think there's features we could go further on this. These are features that introduced by the digital banks, and the banks have been a little bit slow to pick them up. I think customers can use Touch ID or Face ID or voice authentication for conversations with an agent and telephone banking. There's huge potential here. And I think now we need to go further on this. As much as these are important, I don't think the banks are going to win on the transactional level alone, or at least that's my view. I think this is going to be a race to the bottom on fees and efficiency. And you see the neobanks are rapidly commoditizing banking. And what'll differentiate is the ability to use the data analytics on these things, as we talked about above, to drive the healthy behaviors, or at least that's what I think. And, it's not easy. And many, as you mentioned, many have died on the hill of budgeting tools and financial planning and advice. So it's tricky, but times have changed, right? Tech has changed. Open banking is coming in, and someone's going to do this. And you see this starting to come into the fintech space, and you see it starting to get added to solutions. And if the banks don't start to do it, I think they're going to have a big problem.
Yeah, it's worthwhile to draw some differences between the Canadian banking industry and the U.S. banking industry. One of the things that the Canadian banking industry has had for a long time is very close relationships. The top 5 banks in Canada have about 90% of the customer base. It's an oligopoly similar to Australia. In the U.S., you've got some 9,000 banks. And yes, there are, the top 50 probably govern, around, I don't know if it's 90%, but it's going to be a large number. The difference in Canada is that in theory, there may be less pressure to change because the other banks don't necessarily change as fast as the others. But I think that's probably an oversimplification on our part. I think that there's a lot of need to do it. There's a desire to do it, but we're at a time and place from an infrastructure standpoint where we really have to make these types of investments to get onto platform-based technology where all of our decisions can be made, where we can bring all of the customer information in, so we're really getting a full 360 view of customers. These things are hard, right? And if most financial institutions are still running their core systems, their core account, you think system of record, your core banking account, on mainframe-based COBOL written programs, and there's about 300 people in the world right now that can write COBOL, and so. And they're making $300 an hour, I suspect. But I think that, I think that we're headed in a good direction. I think that, I think while I'm not a big fan of the open banking regulation, how it's manifested itself in various places, I think the spirit of what we're trying to do there, allowing all of that data to be pooled so that you can switch banks easily, you can become more secure, you can grant access to it for products and services that are going to aid you. And that's a big deal, right? As all of that data starts to get there, to your point, now you can really start to make investments in analytics. And it's, yes, I might use the word targeting at times, but I think that really what it is about providing the best service based on the best information to a customer that has a particular financial need. I think that's a big deal, right? That's what excites me about, kind of the technological change we're at. Even though I always tell people, don't focus on the technology, focus on the customer. Your technology should be an enabler. Obviously at FICO here, I'd love to talk to people about their technology, what they're using. But I really think that there's a lot of interesting things that you kind of brought up there. So let's jump into the sweet spot here for you, Bruce. You're a huge advocate of financial wellness and making sure businesses have a focus on this. What are a few key tips you can share for our listeners today on how to achieve a healthy financial life? How do you, what do you do daily to make sure that you feel comfortable with financial decisions you're making?
Yeah. So in the context of the customer, I mean, obviously this is an area of passion for sure. And people watching have probably got the sense of that throughout the discussion. I kept sort of threading it in, and clearly I've sort of left the warm blanket of the big FIs to build a startup, which is a wholly different world. But the reality is 78% of Americans are living paycheck to paycheck. And I challenge people on the call, like, what are you doing about it? Right. And odds are not that much. I mean, let's not kid ourselves. So, and as you mentioned, Darryl, it's super hard, right? People have tried this with budgeting tools, et cetera. But the reality is, I think most of the major banks, and yeah, maybe a little bit of this is Canadian centric, but even in the US, most of the major banks are in the wealth business, right? I mean, and I would say, with a broad brush, this is painting with a bit of a broad brush, but the digital banks are largely in the low cost commoditization business, or at least that's where they started. And now I think they're adding a lot of the things that we see above, and you get into scoring, and there's wellness appearing in many of the neobanks now. But historically, financial services has been, the banking space has been built around more debt, right? More credit cards, more auto loans, more mortgages, and now you see the next frontier is buy now, pay later. And a huge focus on fintechs and the FIs is to remove friction to borrow more and borrow more easily. 100 million Americans used buy now, pay later in the last year. And now you can use it for groceries. Now, that certainly doesn't speak to, in my world, make me feel safe. I mean, who's advising not to do this, or when to do it? When you do this, how do you do this? And I spoke at a conference 2 weeks ago, and I said, frankly, we're in a debt crisis. Consumers are spending something like $1.30 for every dollar they have in income. And everybody in the room in fintechs is aiding and abetting this, because our focus is generally, as an industry, is removing as much friction as possible in the credit process and the buying process and the borrowing process. So I think there's a huge opportunity for banks to educate clients, and a very meaningful role in helping customers be financial healthy in the space we're addressing at Parachute. There's other areas, right? Another example is youth banking. If you look at a site like Zogo, they've got some great stats there. 1 in 6 kids learn about finances in high school. 1 in 6, that's crazy low. And in Canada, there's a great app called Mido from Royal Bank, and this is about building financial habits early, and it can be done profitably, right? I think there's apps that can be added from fintechs, white labeled quickly and easily. But coming back to the Parachute space, what about customers in the branches that are declined due to credit score? I mean, generally, they're just sent on their way. So what resources could be provided? When someone's declined, it means they have a problem and they need help, right? So today they head to the high interest lenders, the payday lenders, and that likely means they aren't going to dig themselves out quickly, if at all. So that's where a company like ours steps in. But I think so should the banks. So if people are interested, little plug, come check us out at parachutecash.com. We're a startup. We're switching the URL. It's going to soon be myparachute.co. Yeah, come check us out, and love to chat with anybody on the call that wants to know more about it.
Thanks, Bruce. And thanks for the shameless plug there too. That's awesome. And hey, no, fantastic. I love the spirit of what you're trying to achieve there. And I think it is a big deal, right? I mean, I think some of the things that you mentioned there, and there's a bunch of others as we think about it, the lack of financial education by the time someone gets to university or gets into a job is important. People get declined for all kinds of reasons, not just that their credit score might be low. They might not be able to afford the debt, and who's talking to them about what they should borrow and what kind of risks they're taking. I think the BNPL space is a space that lacks a great deal of regulation, and yes, I said regulation. And there's been some changes here in the US around how they're being reported to the bureaus, but fundamentally it ends up being this almost invisible debt, or by the time that you might be able to see it on a bureau, it's a bit late. And so people can get into trouble very quickly, and it's unseen by the traditional financial institutions. And so yes, it's very convenient. But it's not always about convenience. It really needs, the financial wellness piece here is a big deal. And, we're all responsible, including the individuals that are borrowing, but we've really got to do a better job. So, thanks everyone for tuning into this, my Digital Banking LinkedIn Live series. I'll be back next month to wrap up the 11 Commandments with a very special guest. I have to say that he's my boss, FICO's Chief Marketing Officer, Nikhil Bell. And we'll be hosting it from FICO World, which is FICO's annual client conference, and we'll be hosting that in Orlando, Florida, May 10th to 13th. So please check the FICO.com. We'll have the information you need. If you're interested in learning more about the 11 Commandments of digital banking, please check out the links below. You'll get access to the ebook and my blog on security, privacy, and communication. Bruce, thanks so much. Always great talking to you, taking your time today. I know you're super busy, so I really do appreciate it. And everyone have a great day.
Thanks, Darryl.
Cheers.